In this video, we're going to talk about the health insurance tax credits. They're also known as the premium tax credits, the advanced premium tax credits. They're all really the same thing. It is the premium that is paid in advance, usually from the plans that you get through the healthcare.gov marketplace plans or the Obamacare plans. So I want to talk a little bit more about the plans and how they work as far as the premium tax credit goes to make sure that you're planning in advance. And there is actually a lot that you can do to make sure that you're getting the most out of these tax credits, and whether you're getting them in advance or getting them in a tax refund, it's really important that you educate yourself because this stuff can get really complicated really fast. But before we get into it, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner, helping you reach your financial goals. Okay, so I went over the premium tax credit the other day, kind of positioning it as a way that you can get a bigger refund if you put more money into a retirement plan. But I want to revisit it because there really is a lot more that you can do with the premium tax credits when you're looking at health insurance to make sure that you're getting the right plan. Because even if you're at the poverty line or if you're just phasing out of the poverty line, you might really be surprised at exactly how much money you can actually earn at all the different household sizes. So whether you're single, married, filing jointly with a bunch of dependents, it's going to affect how much of the premium tax credit that you can qualify for. And it's better that you know that today rather than when you file your taxes. That could be a big determining factor of how you handle your finances throughout the course of the year, but also whether or not you choose a marketplace plan or another health insurance plan. So let's go in and start with the poverty lines. But again, you're going to be surprised if you're on the higher side of incomes of exactly how much you can actually earn and still qualify for tax credits or the premium tax credits. So let's go ahead and take a little bit closer look. I'll pull it up on the screen and we'll go through it together. All right, so I'm just going to go ahead and Google it. I'm going to Google poverty line 2020. And I'm going to use the poverty lines from 2020 because those are the numbers that we're using for 2021. So the poverty lines are already set up or always set up a year in advance. So that's why we're going to use the 2020 numbers. And if we scroll down here, we could see the 2020 poverty guidelines for the lower 48. And then we have Alaska and Hawaii down here. So if we go up to the 2020 poverty lines for the lower 48, we could see that if you're single, the 100% is $12,760. And if you don't already know, the amount of the premium tax credit in order to qualify for it, your adjusted gross income has to be between 100%, which in this case for somebody that's single is $12,760, and 400%. Simply multiply that number by 4. And it goes all the way up to 8 on this grid. And then if you have a family that's larger than 8, all you need to do is add 4,480 to this number. And that is how you'd figure it out for the 100%. And again, multiply it by 4 to get 400%. Now I want to use or flip over to the premium tax calculator that I saw for the first time just last week. Now, going through this calculator will help you estimate it, and it's a whole algorithm. It's based on your age, your family size, and also where you're located. But I want to show you how to use this calculator so you can proactively understand whether or not you should be on a marketplace plan or should you look elsewhere, and exactly what you need to do throughout the course of the year to make sure that you're controlling your taxable income or your AGI to qualify for the most premium tax credit. So let's go ahead and go through this. So the first thing that we're going to look at is selecting your tax year. Now it's 2021. That's what we're going to choose is 2021, but the numbers of the poverty line are still based on 2020. So we're going to click on next. Now this is where you're going to enter in your monthly household income, and it has to be at least 100%. And I'll show you why that is. I'm going to change this to 38 because I'm 38. And let's just say we earn $1,000 a month and that we're single. And it doesn't even matter what you put in here. It's estimating everything for us. And you can see right here that your monthly health insurance premiums that we're putting in here, we don't even know what those are, but let's just say with $500, it doesn't matter. It still says 0 over here for the premium tax credit because we're not at 100%. How do you know? If we go to this summary page, page 4, this 4 right here, you can see it says 94%. And as we get over that amount, the 100% amount, so again, going to the poverty lines, 12.7 or 2019, sorry about that, 2020 numbers, go back there, 2020 numbers, 12,760. So 12,760 divided by 12. So 1,063 is the number that we need to get over. So let's just say that we're earning $1,100 per month. And there you go. All of a sudden, we earn just $100 more a month, but now we qualify for $6,000 in a premium tax credit. That's pretty important to understand. And again, it's going to depend on where you are. So I'm in Florida. So if we change that, it's going to change that number. Hillsborough is the county that I'm in, and it's going to change it even further. So again, that's why I said it matters that you fill this out according to you, not just assuming that it's all based on the poverty line. A big part of it is, but it also matters your household size and where you're located. So it can figure out what that silver plan that basically is the benchmark that it's based on in your area. So this is going to be something that you want to take a look at, because as soon as we get over, right now we're at 103%, but once we get over 400%, it will do exactly that same thing where we don't qualify for anything. So let's just get to that point. So it's 12,760 times 4, which is $51,040. So let's say that we're earning, divided by 12, that's $42.53. So let's say we're earning $42.75 per month. $42.75, it's going to go to 0. And right there, you can see premium tax credit, 0. So that's really important. Again, go to the summary. We're at 402% of the poverty line. That means we don't qualify. So just imagine if you can just reduce that a little bit. If you're right at that threshold, and let's put that to 4,100. And all of a sudden you're qualifying for $312. Now, as the family grows, those numbers also grow. So it's really important. If you have a bigger family size, it's going to make a much bigger impact than what you just saw here, because it almost didn't look like you should do anything, because if you're earning $100 less, that's $1,200 for the year, but to only get $312 doesn't make a whole lot of sense. But let's increase this family size. Let's go to 5. It's going to automatically populate it for you, put in everybody's ages, whatever. I'll put 38, 38, 35, and then say everyone else is dependent. So you have 3 dependents. It's going back up to 6,000. And if we look here, we're at 160% of the poverty line. So that's based on a household size of 5. So we go back to those numbers. Now we're looking at, it's based on 30,680. So 30,680 times 5, or excuse me, 30,680 times 4, that's 400%, is 122,720. That doesn't mean that you're earning 122,720. That means your adjusted gross income is 122,720. So that's really important to understand. So if you can put more money in a retirement plan to reduce that adjusted gross income, or find other write-offs, then you would qualify for more of the premium tax credit. And why is that so important in advance? Because if you don't qualify, you might want to take a look at other plans than on the marketplace. So that's why it's so important to look at these plans of whether or not you're between 100 and 400%, but what your family size and where you're located, how much you would qualify for. Now, if we get right over that amount, so that's 122,720 divided by 12, and that's 10,226. Let's just say that's then 10,000. And we still qualify for the full amount at 10,000. And our maximum was, and look at that, we're at 391%. So the maximum that we can earn per month was 10,226. So let's go to 10,300. So it's going to be right over on a monthly basis. So our threshold is 10,226. We're at 10,300, 0. So going from 10,300, let's just say that we went to 10,200, right back up to that $6,000. So $1,200 is now, we earn $1,200 or we don't earn that $1,200 and we get a $6,000 premium tax credit. Same thing as getting a $6,000 refund at the end of the year for earning in this case, $1,200 less. So it's really important that you're looking at this because maybe that was the difference. Maybe you're not that close to the threshold, but you're much over the threshold. Maybe you're at $10,500. Well, then maybe at that point, it would make sense to look at another plan. So you went on this plan thinking I was gonna make $10,200, but then you got a bit of a windfall. You got some more business. Maybe you're a small business owner. Well, guess what? Then you didn't qualify. So it's really important that you're looking at this stuff in advance because there's only so much you can do at the end of the year to reduce your adjusted gross income rather than looking at proactively to making a better, more informed decision. And as this increases, if you go to 6, it's going to do exactly the same thing. Just going to keep going up. And it is based on your ages. So make sure that those are correct as well. Make sure all these boxes are checked. It's very easy to accidentally see that, uncheck these. And that means this individual doesn't qualify. This individual doesn't qualify unless you're clicking off that they're eligible. How are they eligible? If they're a dependent, then they're most likely going to be eligible. So that's why there's a checkbox here. Just make sure that they're checked, or else it's going to do the calculation based on that reduced family size. So again, how you're filing will also affect it. So we put in married filing jointly here. It's automatically assuming. It doesn't know that this is a spouse. It just knows that this is a dependent. So that's basically how you have to do the calculator. Put that in there and it will adjust this number as you move your household size or your area and the ages. So let's say we put in 2 28-year-olds. This number, again, it changes every single time. So it's very important that you're doing this for yourself and not just going directly to the poverty line and assuming that you're going to qualify for everything based on that. Because if you get these ages low enough, it could phase out a little bit earlier because of your area, how much you qualify for. It's basically a whole algorithm. So there's no point in trying to look and understand this formula. Just use the calculator to make a more informed decision. And there is more that goes into choosing your health insurance coverage, whether or not you're going on a marketplace plan or elsewhere. But a lot of it is going to be based on whether or not you qualify for the premium tax credit for most individuals on comparing the plans. So if you're going through the healthcare.gov website and looking at those plans, the MSRPs of how much those premiums are, don't just run away from those plans if they look a lot higher, because you want to dig a little deeper and figure out whether or not you qualify for that premium tax credit and what you can do proactively, because it's based on your AGI, not your revenue. So that's really important, because I see individuals who earn a lot more, able to save a lot more, get that adjusted gross income down, and then qualify, and vice versa. Somebody who's really close, but there's nothing else that they can do in order to reduce that adjusted gross income because they're living on every dollar. So it really depends on your particular financial situation. It's not just based on your net or your gross. So you want to look at that adjusted gross income, look at all of your options, and hopefully this helped you make a little bit more informed decision on which healthcare plan that you should choose to improve your financial life. So if you have any questions or comments on this, let me know in the comments down below. Did it help going through a couple of extra examples? Let me know that too. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.